Vanakkam. It's a continuation in the functioning of secondary market. The next important three items we are going to discuss in this slide. In that, number one is demutualization. I think already we have discussed it in the previous slide. Demutualization is nothing but the stock exchanges are going to be separated from owners of the particular one. So who are the owner of the stock exchanges? Normally it's called brokers. Already I have told you. Once the brokers of a group, brokers of particular native make association, and that association will request the SEBI to provide license for startup there the stock exchanges, and then only the SEBI will provide license to the brokers. So there will be a two items. There is a two concepts we have to understand. One is conflict of interest, and next one is the self-interest. What does the conflict of interest mean? I have to acted as the a role of two. One is I am the owner, another one is I am the dealer. Broker himself is going to trade it as, why I'm telling it himself. Previously it was not, females are not permitted to make the trading and all today, but it is different market. Both the male and female are acted as the stock brokers in India. Previously the stock brokers are the male and they will be owner of the particular stock exchange, and also on behalf of the on behalf of the investor, this same broker is going to be making the trade in the particular stock exchange. That is called the conflict of interest. I will be loyal to either of the one, not to the owner or to be an investor, but I may not be possible to loyal to the owner as well as the investor, because investor activity is meant for commission, owner activity is meant for profit. So both will be has a different one. So, and also the self-interest is another one. That means I being a broker, I want to earn more and more money, because stock market is it's like a myth. It is not going to be happening always in the mood of their upswing or the downswing. So when there is an upswing, I will get the more profit. If there is a downswing, I will get there the loss, or sometimes I may not get there any deal and all. So because of this reason, there will be a lot of conflict of interest. To make it to avoid, SEBI has introduced the system in 2001, which means that board, suppose who is going to be manage the activities of stock exchanges, in that 50% of the representation out of the broker's house. That means that particular stock exchange brokers owners participated in 50% in management, and other than the stock exchange person will participate in the management, even though that in that intervene system, or maybe in a rule in introduced in 2001 may not be giving that much a result. So what will happen then? The SEBI was asking there that with asking with so many number of questions from the investor, and with the reference of the government of India, they will be introduced the new act in 2004, and from the act of 2004, that is demutual, the ordinance was passed. From that day onwards, from that year onwards, what will happening mean, the stock exchanges are going to be opened by stock brokers, but it is going to be managed by corporatized group of people. That means it is a company, a separate company is forming, and that separate company will having there the all such kind of there the what we call this a level of management, top level, middle level, and the lower level management, and these are all coming definitely from there the outside of the people. That is called as there the demutualization. ஒரு ஸ்டாக் எக்ஸ்சேஞ்சினுடைய நிர்வாகத்தை அதனுடைய ஓனர்ட்ட இருந்து தனியா பிரிச்சோம்னா அதுக்கு பேரு demutualization. And move on to the next one, depository acts. I think already we have discussed about so much in 1996. Depositories are the very important person. They will be providing here that instant transfer of shares once the trade is coming to an end in the stock market, over by the terminal or by the screen based trading. And we'll be move on to the last one, globalization. What does mean by globalization? Anything which is going to be marketed outside the India, which is called the globalization. The product is maybe available in India as well as available in the outside India. Because of OTCA in 1992, and NSE and NSE in 1994, and BSE in 1996, that means these 3 years, these three institute will be permitted to open the terminal across the India under the screen based trading inside India and outside India. When the inside India, Indian people are going to buy. When the outside India, all the foreign investor, foreign institutional investor, and qualified institutional placement, qualified institutional prices, private placement, everything is happening across there the world by means of screen based trading. That the trade when it is happening in across the world, mean it is called there the globalization. So because what is the benefit of globalization? Again, I am telling that you more number of terminals, more number of exchanges, more number of liquidity. So when the more number of exchanges, more number of person, lot number of investors coming and doing their the practices and doing the business and doing their the stock market activity, more liquidity will be provided to their the every one person. So it will be both benefit to the investor, get the best price option, as well as government more economic activity, and SEBI more opening of the things.